All right, KSP futures are pointing to a green open. You're going to want to ignore that. The smart money, they've already made their play. The real signal for tonight's U.S. session, it's not in the headline index. No, it's buried deep in the supply chain.
So what you're seeing here, that's just noise. Yeah, this little pop in the headline futures, it's designed to distract you. The real story, the targeted flow of capital, that's all happening right under the surface. Look, all this green on the screen, it's meant to make everyone feel comfortable, a false sense of security. But the real signal, the one that's going to set up the entire U.S. session tonight, is this huge decoupling, a massive split between what foreign money did in the main KOSPI index and what it did in the tech-heavy Nasdaq. So let's break that down.
So if we want to get a read on the U.S. session, we've got to follow the capital vector. And what we saw at the Asian close shows two completely different stories. And let me be clear, this isn't random. This was a carefully planned strategic rotation.
Okay, here's our first piece of evidence. A net buy of over 857 billion won. Now, this wasn't some broad buy-the-market move. No way. This was a precision strike. A huge injection of capital aimed directly at the key technology and supply chain nodes you find in the Nasdaq.
And here's the other side of that coin, which is just as important. While all that money was flooding into the Kosdaq, almost $1 trillion was being pulled out at the exact same time from the big KOSPI companies. You see what's happening? They weren't just buying something new. They were actively selling the main index to fund this very specific bet. This tells us it's a high-conviction rotation, not just a general risk-on day.
So the big question is, why? Why the specific rotation? Well, this flood of capital isn't really a bet on the Korean economy. Not at all. Think of it as a high-resolution proxy, a way to get early exposure to two critical U.S. sectors, AI infrastructure and the naval defense supply chain. Take a look at high-bandwidth memory. These are the chips that are absolutely essential for AI. So when you see a massive surge of capital into the Korean companies that make them, that's a direct leading indicator. It's signaling massive demand from U.S. giants like Nvidia. The correlation here is incredibly strong, around 0.85. Basically, the market is getting into position now for the next big leg up in the AI build-out. And it's not just about AI. We're seeing the same pattern in South Korean shipbuilding. That rally you're seeing, it's a direct echo of U.S. naval reconstruction policy. And this goes way beyond just building ships. We're talking about the entire defense ecosystem, which points right back to prime U.S. contractors. Think Lockheed Martin, think Huntington Ingalls. Global funds are using the Asian supply chain to front-run the U.S. defense signal before the U.S. market even opens. And this whole mechanism has a name. It's called proxy beta. What it really means is that these big global institutions are using the time zone difference to their advantage. The Korean market, because it closes hours before New York opens, basically becomes a pre-market for U.S. alpha. It lets them build up their positions in these critical supply chain nodes before anyone on Wall Street has even had their morning coffee. Okay, but there's a problem. A big one. A serious complication that puts this whole bullish signal at risk. We're seeing a major red flag, and it's coming from the currency market. We have to talk about this divergence. 1445.5. Remember that number. Right now, this is the primary threat vector. Think about it. While all that money was pouring into KOS stocks, the Korean won was actually getting weaker against the US dollar. That shouldn't happen. It's a major anomaly, and it's a critical warning sign. So what does that tell us? It means this capital is probably hedged in dollars. It's not a long-term, confident investment in the Korean market. It's just temporarily parked there to catch a very specific short-term move. And that creates a huge vulnerability, because if any of the U.S. macro data comes in weak, this money can, and believe me, it will, disappear just as fast as it showed up.
So this sets up the battlefield for tonight's session. On one side, you have a really powerful bullish signal from the stock market, a targeted move with real conviction behind it. And on the other side, you've got this deeply bearish signal from the currency market, screaming that this could all be a trap. So which one wins? Well, the U.S. data is about to decide.
All right, analysis complete. Time to shift from what to what to do. We're moving to execution. This is your briefing for the U.S. session. The conditions are set. Here's the protocol. We have two high-impact events on the radar that are going to act as catalysts for volatility. First, at 8:30 a.m. Eastern, we get initial jobless claims. That's our real-time read on the labor market. Then, at 2 p.m., the FOMC minutes drop. You can bet the algorithms are going to be scanning every single word for any hawkish or dovish tilt. These are our triggers. Okay, listen up.
This is the single most important number for tonight's session, 24,654 on the Nasdaq 100 futures. That level, that is our line in the sand. It's the pivot that will either validate the bullish signal we saw out of Asia or confirm the currency market's warning that this whole thing is a trap.
Here is your action plan. It is non-negotiable. As long as the Nasdaq futures hold above that pivot level, you maintain your long positions in the AI and defense supply chain. The moment it breaks below, a 1.5% trailing stop gets executed. Across the board, no exceptions, no second guessing. This is about discipline, not trying to predict what happens next.
So let's run a final check on the two most likely scenarios. The bull case is simple. The Nasdaq holds that pivot and the rally in semiconductors and defense is confirmed. It's greenlit. The bear case, the trap scenario, gets triggered if the Nasdaq breaks below 24,654 and the US dollar stays strong against the yuan. If both of those conditions are met, that confirms a false breakout. You cancel all long positions immediately.
And that leaves us with the one central question. Was that huge capital rotation we saw in Asia a true high-fidelity signal for what's next? Or was it just a really sophisticated pre-market liquidity trap designed to pull everyone in? The market has given us the key. That pivot at 24,654. It will provide the answer. Watch that level.